Picture a scene back in 2010, quants poring over reversion signals while a new idea is brewing. What if machines could read news faster than any human? Fast forward from there to 2025, and AI is no longer confined to the laboratory. It's now part of the engine embedded within Robeco's flagship active quant strategy. But what does all of that really mean for investors? In this first episode of our AI summer course, we retrace the milestones that took AI from academic curiosity to a core ingredient of quant investing. In simple terms, we consider what are the most meaningful ways in which AI is being used in investing today and what still lies beyond reach. I'm Erica van der Merwe, and with me to discuss this are Mike Chen, Robeco's head of alternative alpha, and client portfolio manager, Leda Baggio. Welcome both of you, Mike and Leda. So good to have you here.
Good to be here.
Mike, I'm going to start with you. Perhaps a philosophical or methodological question to begin with. How do you balance innovation in quant, in AI, with discipline? So you've tested and the model says, I've found something better. How do you test that?
Yeah, great question, Erica. Thank you. It's good to be here. So I would say that innovation, is really, really important for us quants, right? Because, for a big part of our progress really depends on technological innovation. So, and this innovation also is innovation data, the availability of data. I think what innovation brings to us as quant investors is that it allows us to answer questions that were important, that we always wanted answers to, but previously did not have the means to. For example, if you invest in a company, you want to invest in a company where the employee sentiments are strong, right? You don't want to invest in a company where employees are very disgruntled, they don't like the management, they don't like the work that they do. You want to invest in companies that's the opposite, right? But if you rely on traditional approaches, you didn't have any way to measure that. Obviously now with big data, with sentiment analysis, as enabled by natural language processing, you can do that. But if you notice, the idea is still a very standard one. It's just that the method, because we have alternative data, because we have all these advanced analytics, we're now able to do it. So it is actually the same approach as has always been in the present day of machine learning and big data, is that we take what is economically sensible, and then we formulate a hypothesis around economically sensible ideas. Then we figure out how to execute it. Now, that might mean more traditional techniques and traditional data, or it might mean alternative data and machine learning, right? But the process is the same. And once we formulate something, we want to make sure that it has statistical power, it has additivity, but also it actually fits with the economic hypothesis. Because if you don't have something that fits with economic hypothesis, it becomes relatively dangerous to fall into the trap of data mining. And this is something that we really want to avoid as quants.
Now, because AI is a fun topic, we've prepared some fun questions for you just to test all aspects of your AI knowledge. Leda and Mike, are you ready?
Ready.
Question 1, true or false? The term machine learning was coined before the first moon landing.
True.
Yep. Correct. That was, any ideas when that might have been?
In 1950s?
Yeah, end of that decade, 1959. Which of the following data types was the first to be used in Robeco's live AI signals? Multiple choice. A, satellite images. B, news sentiment. C, earnings call audio. Or D, TikTok trends.
News sentiment?
That's it, B, news sentiment. True or false? All AI used in Robeco strategies can be fully explained by a human.
Oh, definitely.
True.
Really? Yeah. Okay. 4. What's the chance that a 2010 signal still influences strategy today?
High,
Yeah.
I would say. Yeah. We've obviously continued to evolve the signal, but a lot of the signal that we built in 2010s, we still have it in the alpha model, in different versions, later versions of it. Yeah.
So is that the key then, evolution?
Some signals are evolution, some signals are, completely brand new, obviously.
Okay. In what year did Robeco say we are already using AI, but Hollywood's apocalyptic scenarios have blurred our views?
2018.
17, I think.
Yeah, very indeed. 2017 in the Robeco Quant Quarterly. Now, which came first, the iPhone or Facebook?
Facebook.
Correct. Yeah. Facebook was launched in 2004. iPhone came 3 years later, 2007. Which came first, Amazon's Alexa or Tesla's Autopilot?
Well, I would say Alexa.
One would think that probably because it's more consumer facing, but in fact, Tesla's Autopilot was launched in 2014. Alexa followed the very next year. So close enough. And then final question, true or false? The first online purchase was a pizza.
False.
How would one know? Yeah, indeed. So any ideas what the first online purchase was?
Beer?
It was a CD, and a Sting CD of all things. That was in early August 1994. The CD was ordered online via Net Market, and pizza soon followed. Towards the end of that same month, Pizza Hut's website PizzaNet was used for that, using a proto version of Netscape Navigator called Mosaic. Again, just showing how much has changed and how rapidly it's changed in a short time.
And no CDs anymore.
Although I still have them. Later, just looking back at those early days of using AI within Quant, what was the very first AI technique that Robeco deployed in a live portfolio, and why did it matter? Why was it important?
Well, we actually deployed such signals already before Mike's times. So that was before Mike joined. We've developed our models. The models have been live since the beginning of the 90s. The first strategy since 2004, the live track record, and it's been an evolution throughout time. So the first AI signal has been the news sentiment that we've introduced. So companies with recent positive news coverage deliver better return than those with a negative news coverage. Mike did just mention the NLP as as an advanced technique.
Yes.
So we do use in that case, we derive from advanced event-based text analytics to derive such a signal. So that's one way our momentum factor throughout such a signal has been evolving throughout time. The first one.
Yes. So Mike later referred now to the evolution of some of the data, the techniques. So how would you describe that evolution, the extent of the change and the upgrades really we've seen in the data sets and the models since 2010?
Yeah, I would say that the evolution is constant, first of all, right? So you have, I would say, similar techniques as before, but the change has been picking up really quickly. Let's just take the NLP example. In 2010, people were using bag of words. So really, really quite basic by modern day standards, even though it's only 15 years ago, right? So what you do is you have dictionaries of positive sentiment words, negative sentiment words, and you would do analysis by counting. Obviously, a couple years later, embeddings start becoming popularized, and then you have transformers, which are embedding, but actually are more sophisticated in the sense that they're more contextually aware. And now, latest evolution of large language model, or NLP. Sorry, NLP is the large language model, right? Where you can actually generate all these texts. So the technique on a higher level is similar, but underneath the technological changes are very quick. Similar with data. So previously, 10. 15 years ago, you have satellites, of course, you have some credit card spending data, but now you just have much more granular, much more detailed, and much more widespread availability of big data, and alternative data. So I would say that it's been a very constant and rapid evolution of both data and techniques.
So what you said there, you referred to large language models. So that wave, is that then, from your description, is it something new or simply, just the evolution out of that seed that was there before?
Yeah, so that's a really good question. So I think the large language model is, it certainly is an evolution, but it's also a little bit not, right? I think, so if you look at, if you look at the NLP example, so you have bag of words, and you have embedding, right? And you can, you can basically use it to do certain things. In our case, extract alpha, but the use range is relatively narrow and specified. This is what I guess, in the industry called narrow AI. But now the modern day large language model, right, specifically the GPT, it is trained obviously on general model, but you can use it for multiple purposes. Okay. You can use it for Q&A, you can use it for summarization, you can use it for translation. So this is what's called foundation model. So I think that is the biggest difference from the latest generation of large language model, i.e. the generative AI models, yes, versus the earlier generation, where they're really only deployed in the way it's specifically trained for. But the modern large language model, the foundation model, can be applied more generally and more broadly. Mm-hmm. So I think that is quite different, and that's actually quite exciting.
Yeah. And then linking that more directly to the world of investments, perhaps, Mike, I'll start with you on this question. Where has AI delivered the most durable edge so far in investing? Would that be as an alpha signal, as an execution element, or for risk management?
Yeah, my focus is on alpha. Mm-hmm. So we certainly have used AI for a lot of aspects of alpha. For example, in the language aspect, in price prediction aspect, in actually predicting, for example, crash risk. So there are quite a wide variety of ways you can use AI in alpha. I do know that it has been used in trade execution as well, and also in portfolio construction risk modeling. It's not an area that I focus a lot on, but it has been applied pretty broadly. I think in general also, AI is not actually one specific application, right? It's a family of technique that can be applied very broadly. Right. People have compared it to the new electricity, actually. So if you think about electricity, right, it's used in everything. So I think AI may be that. It can just be used in many, many different areas.
Good point. Yes. Later.
Yeah, and we still, we use, and our job has also changed with that, right? So we use it on a day-to-day basis as well. Like if I think of my position as a CPM, like thinking of it 6 years ago, it has changed. Like AI has changed it. I do see it in our models, but of course you also see in the way we work. I mean, you just do see how a researcher works from their side as well, or how a portfolio manager works, and so on and so forth. So it has been an evolution on the way we work, and also the way we specialize on the different tasks we perform, where our focus is, because it has enabled us to take much more tasks on one side, because a part of it is being solved, but also they are being quite cautious too. Mm-hmm.
Perhaps to challenge you to give us a practical example, not so much on the operational side, but on the investment side, an example of where AI within your team or the research team has been used to refine a traditional signal.
Well, like an example of that would be the reversal, so short-term reversal. So if you think of that, the short-term reversal is a fundamental signal per se. So what does a reversal strategy do? A reversal strategy is buy stocks that have gone down and sell when they go up. So from that perspective, because they're expecting a reversion in price in that side, but using a machine learning framework, you can actually find out that interaction between the short-term price movement, between the news and the trading volume, and hence develop such per se a fundamental signal into being more using ML framework to make it better and put it as part of our model, and advance the model further and get positive returns out of it.
Right.
Or alpha.
Mike, like just standing back, if we look at that evolution that you've both described from 2010 to today, what have been the major drivers making all of this possible, that we've been able to go from this dream of using AI for it now to becoming we're almost there, that it's an everyday occurrence and it's practically usable?
Yeah, I would say three major things. Mm-hmm. It's not just AI, actually. It's sort of pushing quant, and even dare I say, the whole human society along over the last several decades, right? Number one is that the availability of data. There's just a huge amount of data available these days, right? You might have heard a stat that since the dawn of humanity up to, say, 2 years ago, that amount of data is now replicated again, right? So from 2023 to now, we basically replicate all of data from dawn of humanity to 2023. And it looks like it's not slowing down anytime soon, right? So huge amount of data. The number two is there's a lot of computing power available, right? We all know about Moore's law. Apparently, the GPU actually follows sort of a super Moore's law curve. The computing power in GPU world is now doubling every 2 months rather than every 2 years in the CPU world, and all the computing is now available in the cloud as well. So, I mean, if you have a unlimited credit card, you can basically have a limited amount of computing power. Right? So that's not a limitation anymore. And thirdly is that there's just a huge amount of algorithms, really, really powerful algorithms available. I talked about embedding came out in 2013. That came out of Google Labs, right? Google X, Google's research arm. And they made that available. And, you know, even the latest large language models, such as DeepSeek, right? These multi-billion parameter large language model, that's free to download. Llama from Meta or Facebook, right? That's actually available. So all these really, really powerful algorithms, you know, and to action them, you need computing and data. That's completely available. So that really has driven a huge amount of made a lot of things that previously were impossible. We always wanted to analyze, but impossible to do. Now made it within the realm of possibility.
For an investment house, so you name these three elements. Is it a matter of at any point in time you just jump into that river and you up to speed, or do you need to prepare in order to be able to harness all of that?
Yeah.
Well, it's a process. So it's, we say like Rome is not built in a day, and same is with our models and of our signals. Some take longer. I mean, Mike can testify that. Some don't take as long. Like we talked previously about the news sentiment. Like I believe if it were developed today, 6 years later, then probably it wouldn't have taken as long as it took back then, right, Mike?
Yeah.
Probably you'd say today it would be developed much faster because you've got, again, also a lot has happened throughout that period of time.
Yeah, but you know, like Leda said, right? I don't think you can just do it right away. I mean, certainly you can do AI on the cheap, right? Or AI dorm room style AI, right? But that's not what an sort of an institutional scale investment house should and would do, right? So in order to do this properly, you need to build an infrastructure, which takes time, which takes a lot of resources, and you know you got to continue to evolve that structure, that infrastructure. So while you can build it very quickly these days using modern tool, the experience and the knowledge and the best practice does take time to get familiarized with, get to diffuse across the organization, and for people to learn how to use it in the best possible way. So there's quite a lot of institutional knowledge, I believe, in building up such an infrastructure like what we have over the past several years.
And you need to stay true to your investment philosophy, right? So that's the one thing that distinguishes us from anyone out there. Like we live and breathe that. Like our three pillars on how to make everything explainable out there, how it has to make economic sense, of course, be based on the data and do thorough research on that. So it's a lot. Of course, if you introduce something new or relatively new, because it's already in the 50s that we've heard the wording. Nevertheless, it's a continuous process, and many need to get acquainted with that. So it's a longer process, and we need to stay true to that.
Yeah. So given all that you've described, these milestones over the past 15 years or so, how do you describe these milestones, or how do you even sell the trajectory of all of this to investors who might feel this is all of a bit of a black box, and then with the addition of all these AI techniques, it's become more of a black box? How do you respond and how do you explain?
Well, our aim is definitely, Erica, to have a glass box instead of a black box. So basically transforming the black box to a glass box, or the perception of a black box to a glass box, but to be more clear. So we do a lot in-house. We are in the comfortable position of having state-of-art infrastructure. Mike mentioned we have 50 plus investment professionals in the team. So by developing it all in the house, within the team, then it is much easier actually to find out and to see where the added value of each of these signals is. So in that respect, if you develop in-house, if you have 50 plus colleagues, if you know what each signal does, how much does it contribute to performance, or does it save in risk, even looking forward, then I think it's all clear. It's very much a glass box in my view, wouldn't you say?
Well, let's hear from Mike.
Yeah, and I would actually just add to Leda that, this perception of quant as a black box really irks me, right? Because if anything, actually, I think you can exactly explain why quants make their investment decision from data into transformation of such data expressed into portfolio actions such as buy and sell decisions, right? So everything along this whole step can be explained, even for machine learning. Actually, so people think machine learning is a black box. So machine learning is definitely complicated and more complicated than, I would say, even the historic or the traditional quant techniques. But even then, you can actually explain why does the model make such decisions. We know at least which variables is influencing the model to make buy or sell decisions. And also, which part, how much P&L is attributable to which inputs and which type of dynamic, such as linear dynamic or exponential or interactive dynamic. All that is explainable. And this is really, really critically important, right? Because, we are a large asset manager. Some of our clients invest upwards of €1 billion or more with us. We cannot go to them and say, hey, actually, we don't know why your strategy made money, algorithm picked it. That's not a good enough answer, right? And we don't want to tell that to our clients. And more important, they also have their stakeholders they got to be responsible for. So we spend a huge amount of time, in both educating our clients on what is driving their investment strategies, and also in developing the tools to help us. Even for machine learning, I just mentioned, right? A colleague of mine recently has developed a set of tools so that we can actually explain a machine learning model or strategy, just like it would a more traditional linear type of strategy. So everything we do is a glass box. I want to distinguish this idea of glass box versus glass box. Black box to me is something that's impossible to explain, and that's not the case with us. Sometimes it is complicated. I'll give you that, right? For example, a neural network is more complicated than a linear model, but it doesn't mean that it's unexplainable. It's the opposite, rather.
Now, given all of these milestones, the complexity of the technology, and just everything that it enables, how does it pave the way for tackling completely new kinds of investment strategies?
Well, we've integrated in current strategies whenever that's possible, and we've done it throughout time. Rome was not built in a day, and so was our model not, and it's in a continuous evolution. But of course, we also can build them up as a standalone. Let's say end of last year, we launched our ETF range, and one of them was a dynamic theme machine using ML and NLP signals. On the same time, not going against other proven factors or signals as well, because such a strategy would then integrate both worlds, as you'd say. But I think the next session we are talking right about it.
Yeah, I would just say that all this IP, right, these exciting new IP, turbocharges our existing strategy.
Yes.
But it also allows us to create new possibilities.
Right.
Right. That's kind of not their example. Leda mentioned this theme machine, right? It's basically a quantitative version to do theme investing. We think that has certain advantages, and we'll talk more in the next session. But it really is quite exciting era that we're living in right now, especially fueled by this latest AI wave. But and it has happened way before the latest generative AI has picked up. It's been a constant and nonstop evolution, and I think it's just we're living through a very exciting era as quant investors.
Mike and Leda, thanks so much for your insights.
Thank you.
And thanks to you for joining in our milestone tour, which was just the beginning. We now leave the lab entirely and ask, what if AI invents markets that we can't yet imagine? Read our first companion article, Into the Great Unknown, it's entitled, and let your curiosity light the way. And then join us again for episode 2 to see which of those futures are already taking shape.